I really hope that you all are making a lot more money than I am, which isn't hard to do considering I just lost $1,200 this week. It is Friday, November 8th, really, really early in the morning. And I'm definitely not sitting on an all-time high today. This is the video log that takes 30,000 to a million, by the way. It's going to happen, but I'm definitely taking a detour after these bad trades that I've been doing here recently. If you watched the previous log, then you will know that I placed a large bet on EXK and Delaware Silver, and it definitely did not work out. I'll take you to the account and show you what my account looks like right now. I'm about $1,200 less than what you saw previously. I'm sitting at $74,141 at the moment. It's mostly due to EXK and Apple going the wrong direction that I am anticipating. So Apple went up, and I'm net negative at the moment actually on Apple, unfortunately. So I am actually losing money with this setup that I have right now that I'm not going to take you through. EXK, this is what it's like. They definitely missed on earnings. They lost 5 cents per share, where rivals that are a little bit lower cost, like Pan American Silver, are actually beating expectations and actually earning 35 cents per share during a quarter, which had the price of silver elevated, and that's how a company should be operating. I know that EXK is one of the highest cost producers, and they're very leveraged on the price of silver if it goes up, but it needs to go over 22, 23, 24, $25 in order for them to actually make a little bit of money here, and that's just this is not happening. So if you compare the 5-year chart, look at how this producer was able to hold on to their roughly $20 stock price, and EXK on the other hand, and that was silver, you'll see the slow grind lower, definitely not sitting at 550. So, but today I want to talk about uranium because I am kind of getting excited about uranium again a little bit. Personally, the market isn't really getting excited. I guess chemical saw us a little bit of excitement here. It's sitting at 963, had that really big nice pop over here earlier in the week, and that's all good. And the thing is, they locked in a contract, and that's why you see the spike over here, because they locked in a contract up to, that's why it spiked to $10, and at quote-unquote favorable prices. And so that means that the arm twisting is working. And what is this arm twisting that I'm talking about? Well, Cameco had this strategy of purchasing uranium. So you're going to get a little uranium talk here. From the open market, they shut down one of their best assets, one of their best mines, and they bit the bullet, paid the severance packages, and the plan was, because the spot market is over flooded with uranium, and it is, there was estimated that there was enough market to last all of the utilities around the world for like 8 years. There was enough uranium overground, above ground, to last all the utilities for the next 8 years. And so Cameco shut down its McArthur River, and now it's buying spot uranium, from the spot market to fill out their orders, basically, to their contracts, to make good on their contracts. And by doing that, they're trying to deplete some of that excess supply out there in the markets in order for them to have some bargaining power, in order to be able to twist the utilities into agreeing to higher spot contracts. And it looks like it's working, since they've secured one already. But here's another thing that I think is important when it comes to the uranium market is, there was that commission set up by President Donald Trump about the uranium producers, and they were trying to incentivize the U.S. producers by, requiring a certain amount of uranium be sourced from local mines rather than countries like Kazakhstan or Russia. And that didn't pass, but there was supposed to be some kind of commission set up to see what they can do about the local producers and help them out a little bit. Because none of the U.S. producers are producing at the moment. They're just kind of in a wait and see mode, just paying their executives or whatever a monthly salary just to wait, which is, a big waste. So that's happening. But one thing that's also happening in conjunction with that that's important in my view is that, and this is this is where I come in, right? My opinion is that a lot of the contracts that would be happening right now are actually holding off to see what's going to happen with this commission and how things are going to play out over the next few months. And so a lot of the contracts that are happening are just kind of, in a wait and see mode as well. And the longer it takes for them to wait, the more time is delayed, um, the more depleted the spot market is going to be, and the harder it is for the utilities to get a good price for uranium. If you're unfamiliar with the uranium business, it's basically just one buyer, which is all the utilities. It's a very inelastic demand. Basically, the demand is pretty static unless new plants, nuclear nuclear plants are opened up or shut down. The demand is very static because it's just the same, every month. Because once they're going, it's very costly to stop a nuclear plant from operating, and it just needs to be kept going and going and going, and it needs to keep producing energy. So, as I was saying, I think that maybe the uranium market has been a little bit depleted. It's been a year of chemical buying into the spot market, and also I know that Kazakhstan reduced some of their production as well, and most of the mines around the world are either shut down, the companies are out of business, or it just so happens that they're in wait and see mode, kind of like the UR Energies of the world and the Energy Fuels of the world, the two stocks that I own in conjunction with Cameco. So I think it's going to be pretty interesting what happens next. It's going to be it might catch us by surprise, right? It might catch me by surprise what happens in the markets. It could be that a bunch of contracts come in at the same time, maybe early next year, or they don't, in which case we'll be just grinding around along the bottom, just like we have been right now, in the uranium market. So, but I don't want to miss that opportunity. If indeed it is time for the contracts to be renewed and some bidding up to happen, I really don't want to miss it, because the returns can be pretty dramatic in this illiquid market. So those are my thoughts on uranium. I just don't want to miss the opportunity. I've been holding on to some uranium stocks for quite a while, and I want this to be, profitable for me. I don't want to miss that opportunity, having put in so much research and reading, at least relatively speaking, for myself. I want it to pay off, and so I don't want to just sit idle. So I may actually increase my bet if I find a good opportunity. I may actually put more into either Cameco or some of the other two uranium companies, the U.S. producers, and see how it works out for me. Clearly, I haven't had very good luck with mining companies. Endeavor just cost me a ton of money. But here's my Cameco position right now. I have 900 shares. I am sitting at a 2.46 loss at the moment, percent-wise, and it's 10%. It's over 11% of my account, and then I have the options. I have about $82 worth of liability. I have 600 shares that I've sold call options against worth of collateral, as well as $1,650, 1,650 worth of collateral as well. These are all the options here. You'll see them. They only have, a few cents, a few dollars here left over to expire. So I'm sitting at 65% gain on the options at $154, which kind of offsets the negative 218. But this doesn't really count all the options that have expired already and all the profits that I've made from expiring options like these two that expired on November 1st just now. So, and all the sales that I've made from Cameco, from executing trades that are, above or below the spot price there. So I've profited a lot off of this company, and I continue to profit as long as it sits between $9 and $10. I'm pretty fine with it. This is the 5-year chart right here if you're interested. I've been trading all along here for this sideways market, waiting for that moment where uranium actually picks up. But there's no other company that I would rather hold for the sideways market while we're waiting than Cameco. All right, I think I'm going to end it right there. Again, sitting at a $1,200 loss or so, but I'm not sweating it. I'm going to find a way to get back in there. I'll probably try to, re-roll some options again, and maybe try to buy an option, maybe try to buy a call and some kind of earnings on a company that I'm pretty sure is going to do well. But for the most part, I'm just licking my wounds right now. I'm not worried though, not worried. I'm looking also to buy maybe UK and Korea. I think that'd be good. But Korea I should have bought when it was in the low 50s. Now it's low 60s, and I'm kind of regretting. But no, not to worry. All right, that's it. That's the update. I hope I helped you guys with some of the uranium, like what's going on there, what I think is going on, and what are some of the catalysts that I think are going to take the price higher. I really hope that you all are making a lot more money than I am, which isn't hard to do, considering I just lost $1,200 this week. So best of luck to y'all, and I guess I'll make another video probably on Sunday or Monday night. Until then, peace out. Wait, okay. I didn't have it on the stop button. Peace.